Hi, everyone. We wanted to welcome you. Thank you for coming to our little talk. We've got mortgage with GRA today, and I wanted to introduce you our great representatives. We have Bob and we have Sarah, and let's talk a little bit about you guys, where you're from, how long you've been with GRA, and some things that you wanted to share.
Awesome.
Go ahead.
Thank you. So my name is Sarah Grebenik, and I have been with GRA for 1 whole month. I've been doing mortgages for 9 years. Previously, I was at Chase Bank, and I'm really happy to have made the switch to GRA. Really excited about the possibilities with them and partnering with Coldwell Banker. For me, I grew up in Minnesota, and then I moved out to Colorado in 2006. And absolutely love it here. I have 2 little kiddos, a 9-year-old and a 6-year-old, that definitely keep me busy. So, but happy to be here with you guys and let's start this partnership.
We're happy to have you. And what about you, Bob?
My name's Bob Book. I've been in this industry committing mortgages for about 25 years, over 25 years. Started actually back in the day when we received rate sheets via fax, and if there were rate changes, the fax machine would start smoking. Actually used to take applications on paper, if you can imagine that. And I've been with Guaranteed Rate Affinity since January of last year. Many of you know me already. And this is a great organization, and I'm happy to partner with all of you and Coldwell Banker.
Fantastic, fantastic. Yeah, so the objective of today's conversation is to be able to impart not only wisdom about some things that you want to keep in mind when you're talking with your potential clients that are going to be looking for mortgages, but also creating a narrative and a script for you to be able to hand off at the right time to Bob and Sarah in a way that makes the client feel like they're really being served at the highest capacity, the highest level. Okay, so some things that we're going to talk about today is the power of partnership with GRA, what we've got going on, and then we're also going to do a high-level overview of the steps to mortgage and what's involved, what do the products look like, and the reason why I want you guys to know about the products, and the reason why we want you to know about the products is so that way you can start thinking from a perspective of adding value to your customers from another aspect of this real estate transaction. So that way they feel really comfortable. You feel really comfortable. You know exactly when to facilitate an introduction that best serves them. So let's go forward and let's talk about the power partnership. Bob's got a great little sheet for those of you who are interested. We will have them in the office. This is talking about the power partnership with Guaranteed Rate and Coldwell Banker. Bob, why don't you take it away on that?
All right, thanks, Juan. So in October of 2018, Guaranteed Rate, a top 5 national lender, formed a partnership with your parent, Realogy, that resulted in Guaranteed Rate Affinity. It's a 51-49 partnership. Guaranteed Rate, 51% owner, Realogy 49%. And since then, we've done a tremendous amount of volume, growing by leaps and bounds every year. In fact, last year, Guaranteed Rate Affinity funded over $13.4 billion. And we're licensed in 49 states. Yeah, that's a little bit. It's tremendous. But we really place a lot of value on customer satisfaction and making you shine. And in fact, our Net Promoter Score is 83%, which leads in the industry. So the goal is to make you guys look great and, of course, protect your paycheck.
Yeah, it's fantastic. And that Net Promoter Score is really important as far as being able to find a mortgage lender that can provide you the most value. So definitely have the conversation, sit down with either Bob or Sarah and start learning about what really adds value. So the other thing I wanted to talk about is you're licensed in 49 states, correct?
That's right. Absolutely.
Yeah. So licensed in 49 states, why does that apply to you potentially? Let's say you've got a buyer that, okay, suddenly they don't want to live in Colorado. They want to go to Arizona or they want to go to Florida. Why not facilitate the introduction so they've got a lender that they have access to not only in Colorado, but they have now access in Florida or Arizona, right? So those are some things you want to start thinking about, is adding value, not just because they're going out of the state, but it's really fostering that relationship. Okay.
And we might get into this as well, but just the power of partnership with us in the Coldwell Banker office and the Net Promoter Score, that we want to work with you guys as a team, right? We want to make you guys look good. We want to give them a good experience so that not only the client has a wonderful transaction, but you guys as well, right? So your satisfaction is equally as important to us, and that all kind of goes together, right? So we kind of we focus on the client and you guys to make sure that everybody's feeling really good about what's happening in the transaction.
Exactly, exactly. So do we want to talk a little bit more about not just the power partnership, but some other aspects that really bring GRA to the table in terms of working with Coldwell Banker?
Well, yeah, I mean, first of all, we have more than 30 investors, which is huge because basically we're able to offer a wide variety of products and programs. And based on my experience, it's really unsurpassed. As a correspondent lender too, we do everything in-house, which is incredibly valuable. So based on the number of investors combined with controlling the process from start to finish, it really is the best model that I've ever been a part of. Unlike a traditional bank,
Yes.
where you're locked into what the bank sells,
Yes.
or a broker model where a mortgage broker has to package the loan application and send it off to the investor to have it underwritten. If that gets declined at that level, then they're starting all over again. But by having a great variety of products and investors and controlling everything from start to finish, it gives us a competitive advantage in terms of pricing, timing, efficiency, and as a result, that combined with our technology, we're really able to process and close loans in a relatively short period of time compared to the rest of the industry. So it's an definite advantage to your clients to be able to have that at their disposal and to be able to close quickly.
Do you have anything to add on that?
Yeah, I mean, and GRA does a great job of providing us with information and education about all the tools that we have available to us, all the different products, the different investors that we have, you know, nitty-gritty differences between the two, so we can really understand what products will best like serve that client, right? So we have really, really wonderful tools that we can utilize at our fingertips to determine what is the best way for the client to go. So it's really fantastic. You don't really get that anywhere else. I mean, you really don't get it anywhere else. So it's a huge advantage to clients and to realtors, because you know it can be kind of a one-stop shop for them. So
Not bad. So now what we're going to do is we're going to do a little bit of role play. Okay. We're going to pretend like I'm the client. Okay. And I've not only been buttered up by the real estate agent, and now I feel comfortable having the conversation with GRA. It's like, okay, now I've sat down. Okay. We're beyond the, oh, I don't want to get pre-approved the whole thing because it's going to ding my credit. Let's talk about what this process is going to look like. I'm so curious, right? So we've got a couple steps to mortgage that we want to highlight. We want to talk about when this is going to happen, when you want to start having the conversation. What does a pre-qualification letter look like? What does a pre-approval letter look like? And what do the products look like? What might be applicable to me? So how about we do a little test run? How does that sound?
Sure.
Yeah. Okay,
Sure.
cool. All right. So we'll play. Okay. So let's say I have been talking with one of the realtors in the office, and all of a sudden, you know, they say, well, you know, I've done a deal with Bob, or I've done a deal with Sarah. Why don't you have that conversation, right? I think we're at the point in our relationship building phase where it's really valuable for you to know what you can afford and what you can get yourself into as far as mortgage is concerned, right? So now I'm in that step. Okay, I'm curious about mortgage. I come and I talk to you. I say, Bob, what do I do? I've never gotten a mortgage before. You know, mom and dad used to buy the houses cash, and now I need to figure out how to get a mortgage. What do I do, Bob?
The very first thing we need to do is to basically get you pre-qualified and start by completing our online application. It takes about 10 to 15 minutes.
That's it, 10, 15 minutes.
That's it. Pulling a credit report and then reviewing your credit report and discussing what your needs and wants are and trying to determine the best type of financing to meet your needs.
Wow. Okay. So, you know, my question as a buyer is, well, you know, if you pull my credit, what's that going to do? If let's say my timeline changes, all of a sudden now I have a report that says, oh, you know, he checked his credit, blah, blah, blah. What if I don't want to buy on a certain timeline? What do you have? What do you want to teach me about that?
Well, once your credit report's pulled, it's good for 120 days. So
Really?
yes,
120
absolutely.
days.
Yes.
Right? So this is really important for you guys to know, if you don't already know, is pulling the credit is not a bad thing, especially if they're serious about buying a home. 120 days is a great timeline for you to get your stuff in order.
Absolutely.
And we usually say it gives you 3 months to find the house, right?
Yes.
Because we use the last 30 days for the closing process. So we want to close all successfully before the 120 days is up.
Mhm.
But it is a common question that we get, how many times are you going to pull my credit? Right? You're going to pull it now and then you pull it again at the end, or what does that look like? And people can get really nervous about that. But we just pull it once. So we pull it once at the beginning, but we do put like trackers, if you will, on their credit report. So if it does significantly go up or down, or if they do run their credit for something else, it will alert us so that we can have that conversation with the buyer.
Yeah, and that conversation is really important for them to have with the buyer, because it is about helping the buyer obtain a loan,
Yeah.
right? So what are some things that I don't want to be considering in terms of finding credit when it comes time to me buying a home? What should I really avoid?
Well, for one, you don't want to have multiple polls and applying for a lot of outside credit.
Yeah.
Now, one thing that most people are unaware of is that you're allowed to have an unlimited number of credit pulls within a 30-day period, and it only counts as one. So that's huge, but you do not want to be applying for lots of different revolving
Yes.
credit or installment loans or auto loans or
Yeah.
just going crazy and responding to every solicitation that comes to you in
0%
your
offer.
mailbox,
Yeah.
right?
Yeah,
You don't want to do that.
right.
Um,
But that's really important with the multiple pulls for the same reason, right? So if you have a client that's like, you know what, I've already talked to a lender, they already ran my credit. I don't want to talk to another lender and have them pull it again because, they're worried about the impact that might have. If they do run it for the same purpose within that 30 days, we should pull the same credit score as the original lender. So, we get that as sometimes a hang up, like, hey, my client already talked to somebody. It's okay. There won't be that impact to their credit. So that's a really important point.
Yep, that is really important, what she just brought up. Multiple pulls for the same purpose
Yeah.
is the key. So make sure that they don't go looking for the Mercedes Benz while they're looking for a house.
Yeah.
That's right.
I usually
Okay.
honestly tell people 3 pulls within 3 weeks just to be safe. So I like to give them like a number, like you can pull it 3 times for the same purpose within 3 weeks, and we should all pull the same one.
Now, as a buyer, I'm curious, right? The poll, is that the same as an inquiry?
Oh, that's a good question. So an inquiry can be like a soft hit on your credit report, like if you check your Credit Karma, or if you have like a credit journey tracker or something that comes on your credit card statement, that's usually just a look at your credit report and usually doesn't affect your actual score.
Mhm.
But when we pull it for a mortgage purpose, it is a hard pull to their credit. So it is going to take their credit score down a couple of points when they do that hard pull, because it's just a more significant inquiry into their credit.
Good. And does that happen at the pre-qual stage or the pre-approval stage?
Well,
Both.
we're doing it one time up front. So once you have completed your application, you're going to authorize the credit pull. And we're going to see it at that point in time. And unless there is a need to pull it again, we're going to run with that very same credit report. Now, if there are blemishes on there that need to be addressed, it's actually a good thing to find that out sooner rather than later
Yes.
to initiate this step up front. So hopefully the derogatory information on the report can be addressed sooner rather than later to put the prospective buyer in a position to be able to go out and purchase a home.
Yeah.
Because you don't want to waste your time and put anybody in a car unless they've been fully pre-qualified at the very least.
Right.
Yep.
Right.
So in a sense, it's saving you time and it's saving them time as well. And it's putting them in a position where they are really able to do this,
Yeah.
right? This is really important, is adding that element of responsibility and then also control. Okay.
Yeah.
So, yeah.
Oh, I was just gonna say that I try to have that conversation up front too, when I ask those like initial questions. All right, when are you thinking about buying? What are some goals that you have? What are budget ideas? And do you have any credit concerns, right? So that maybe we can address those. And maybe that means you're 6 months out to buying, or maybe it means you're a year out to buying, just depending on maybe if there are some credit issues or concerns that we can kind of take care of before we do the next official step. So.
Good, good. And it's okay to ask those questions,
Oh,
right?
yeah,
It's so important
We
to ask
want to
those
know sooner
questions.
than later, like you said.
Yeah, it's so important. And if the buyer that you're dealing with doesn't feel comfortable yet having that conversation, you can prepare them to be comfortable to have that conversation with the loan officer, because that's what's really going to get the ball rolling, right? So that's why we're imparting this wisdom about, hey, the credit pull's 120 days, right? For the same purpose, it's okay. So, in this time frame, especially in this market, when you're going to be looking anywhere between 3 and 6 months before you even get a contract ready on a property, it's important for you to know what that time frame looks like. So, let's talk about the differences between pre-qual letters and pre-approval letters.
Sure.
Let's help the realtors understand what is the difference and why it's important to know those differences and how they can add value to a buyer who is curious about what that even means.
Well, let me jump in, because with guaranteed rate affinity, we're not allowed to just compose our own quote unquote pre-qual letter. We only generate pre-approval letters, and they are based on various milestones as they occur. So for example, number one, the difference between a pre-qual and a pre-approval, basically, pre-qual is borrower completes the application. We pull the credit report, we review it, we look at some basic qualifying criteria, and typically we can say, okay, this is what it looks like you're pre-qualified for. In terms of a pre-approval, it's taking it to the next level, where we're actually running the credit report through one of two automated underwriting systems provided by either Fannie Mae or Freddie Mac. So the traditional method of generating a pre-approval letter is by running one of those two automated underwriting systems, which will hopefully result in approve eligible findings. And based on that, then we're able to generate a company approved pre-approval letter.
Yep.
So it's based on the size of our company and compliance issues and regulations. This is the criteria. So when you get a letter from us, it's solid, and you really don't have to worry about whether or not it's subjective. It's something that you can take and run with. And just to expand on that, we also offer a service called Red Arrow Approval Express, where we can take that automated underwriting system pre-approval to the next level and have a full underwriting review for a pre-approval, which even further strengthens the buyer's capability and purchasing power.
Yes. I like to think about it too as like a pre-qualification is, somebody just telling you, oh, this is how much money I make. This is what my credit is. This is how much money I have in the bank. And you say, okay, well, based on everything that you told me, you could generate a letter. And a lot of lenders do that, right? So the next level of doing the pre-approval, we are verifying a lot of that information, right? So I want to see your pay stubs. I want to see your W-2s. I want to see your bank statements. I want to verify that the information that you told me is correct. So that's taking it to the next level of that you're a pre-approved, and we ran it through our automated underwriting system. All the information that you gave me says, yes, you are approved eligible for this type of a loan. And then, yeah, the kind of Cadillac next step is the Red Arrow, which is fantastic. I mean, it's a really, really great program. We do it for free for people. And not only for the buyer is it a great feeling to know that they're, secure in their financing, but for me as a lender too, and you as a realtor, when they make that offer, we can call that listing agent with so much confidence and telling them, hey, this hasn't just been a prequal. This hasn't even been a pre-approval.
Right.
We're actually fully underwritten. And really all we need at this point is your appraisal and your title work. And we may be able to waive the appraisal. We don't know yet, right? So to be able to call and give your buyer that extra level of confidence with the seller really goes a long way, especially in this market.
Yeah, I really, really, really agree. So now I want to talk about, we're going to bounce back and forth,
Mhm.
right? Because there's a couple different dynamics that might be applicable to your buyers. It's on a case by case basis, right? I mean, you're running into a variety of different customers, right? You're going to have some people who have multiple income sources, some people who just have one W-2, and that's all they file. You're going to have all kinds of situations. So I want to talk about products, a little bit about some home loan options, some stuff that might be applicable. And then I want to talk about how, okay, what does that conversation look like with you? Where, let's say, I have, 10 different 1099 forms and I have one W-2 form, my whole thing is a mess, or I have, all 1099s, it's all inconsistent income, but, I make the money, it all depends. I'm curious about this, or I've got the W-2. What is really applicable? So how about we do a little case study? So let's say,
Sure.
yeah, let's say, my job, right? I've got a W-2 for this position. So one thing I really want to know is what home loans might be available to me. Let's say I'm a first-time home buyer.
If you are a W-2 salaried or hourly employee with, excellent credit,
Mhm.
you're my favorite type of borrower.
Oh, you love me.
Yeah.
Absolutely. I mean, that's
We got
really.
20%
Yeah,
down for big
yeah,
credit and a
yeah,
steady job.
Yeah.
Right,
Yeah.
yeah.
Love
We
me.
get excited, over those.
We need those every once in a while,
Yeah.
don't
Good.
we?
Okay,
So
so now let's
keep
say,
it-
let's
keep
say I
it
come to
safe,
this. So
yeah.
we've got the easy one out of the way, right? We really covered that one.
Right.
Okay, so now let's talk about, I'm W-2, I've got excellent credit. I don't have the 20% down.
That's fine. We have a lot of different low down payment programs. FHA's the most popular, requiring only 3.5% down. A lot of people, however, don't realize that conventional also offers a 3% down option.
Yep.
For some reason, and I guess it's due to the media out there, that a lot of people think you have to have 20% down for conventional financing, which is simply not true.
Mhm.
The thing, I think where a lot of people get this is because if you put less than 20% down, you will have PMI on that mortgage. But there are some other ways to avoid that as well.
Exactly. So, avoiding PMI is possible, especially with different loan options that you guys might have available that apply, right? So
Yeah,
let's say I'm curious about that. Okay, I want to do the 3% or the 5% down. What does that look like? How can I avoid the PMI? What are some examples that you might have to share with me?
so one really awesome tool that we have in our pricing system is that we can do a variety of options for PMI. So we can say, you have the full PMI, you can factor that into the monthly payment. You have the option to pay a little bit of that upfront to reduce your monthly PMI. You can pay a larger amount upfront to significantly reduce that PMI. So we have some really, really great tools to be able to, I guess, customize it for that borrower, right? Like you're not gonna totally avoid PMI if you put down less than 20% unless you did like a piggyback loan, like an 80-10-10 loan, where you put down 10% of your own funds and then get a second mortgage with the other 10%. That would avoid mortgage insurance. But we do have some really cool tools available, which most, I can tell you, coming from the bank that I came from, is not a tool that we had at all. So that's something really specific to GRA that they allow us to customize and give those different options to a buyer. It really helps too if you have like a tight debt to income ratio, right? Oh, we need to lower your payment by another $50. Can we pay some more of that mortgage insurance up front to lower the monthly payment to be able to get them to qualify?
So there's a variety of options that we've already addressed, right? So now let's pretend, I've not W-2, but I've got great credit, all 1099s. What does that look like? I'm super nervous because, like 1099s, I'm not like a real employee in your eyes. What does that look like? How can you make me feel comfortable as a buyer?
Well, if you've been self-employed or a 1099 borrower for at least 5 years, then there's a good probability we might be able to get by with only 1 year of tax returns. Otherwise, the standard is, I'm going to need your most recent 2 years tax returns. And as a result of COVID-19, the underwriting guidelines for self-employed borrowers, including most of you out there who are 1099 employees. It's gotten a little bit more difficult. We need the most recent 2 years tax returns. And then on top of that, they've layered on needing a most recent profit and loss statement, year-to-date P&L statement supported by 3 months of business bank statements showing the commission checks coming into your business bank account to support the qualifying income off of the tax returns and P&L statement. So
Yeah, so there are products that are available to you, commonly referred to as realtor loans.
yeah,
That's the thing, okay? All right, so these things are available. Now, this is really helpful
One more
for you
really
to
quick
know.
thing.
Yeah, go ahead.
So one other really awesome tool that GRA has for us is that when a buyer applies on our website online and they upload their tax returns directly there, it runs it through a program called LoanBeam that does an income analysis for us based on their tax returns. So it's a really, really cool tool. We can be really confident in the cash flow analysis that's done of their business. And then we take it that step further by really making sure we look at, the year-to-date profit loss, the bank statements to make sure that the income is on track for what the last 2 years are showing. So it can give your buyer and you as a realtor and the seller, yes, we've done due diligence on this. We've run it through our system. We understand what's going on. We understand what's happening year to date and it all looks good. So
This is
now,
awesome.
well, one thing about that too, though, is that the P&L statement and the business bank statements must be within 60 days of the note date or closing date.
Yeah.
So once you're approved, don't procrastinate. I know it's a tough market out there, but if you get that green light approval, go out and do it. Otherwise, I'm going to come back to you next month and say, okay, I need a revised profit and loss statement through the last date of this month.
Yep.
And I need another business bank statement.
Yep.
And it can be frustrating. Plus, based on the cyclical nature of those who are commission based or self-employed, if there's a dip, then there is a possibility that that individual may no longer be able to qualify.
Exactly.
And another really good reason to be in touch with somebody like Bob or myself so that we can have that conversation with them, right? And be able to keep their pre-approval up to date,
Mhm.
right? Be able to watch all those things as they go through the process so that you don't have a surprise at the end.
Exactly.
Right.
Just
exactly.
something that nobody wants.
Right.
So,
Yeah, so
yeah.
they're covering their side and you're covering your side by facilitating this introduction and facilitating this process because it wastes less of your time. So you can focus more on what's important, which is finding a great property for them and then getting them to the closing table with a loan. So this is really, really important for you guys to know. So that way you can impart the wisdom, say, hey, listen, I know that it might seem daunting to have a conversation about loans, but let's talk about it. Let's make it less and more. Okay,
Yeah.
it's a really easy way for you to control the situation and make things more effective and put the things in their wheelhouse as far as the buyers are concerned. So that way they have a really great way to move forward.
Right.
So okay, let's talk about some of the specific products, right? So we've got FHA, we've got conventional. What about 15 years? What about this? What about that? Tell me about some other stuff. Let's say, what would, if I'm 1099 and I wanted to buy a fixer-upper, some mortgage that might apply to me?
Well, we have a renovation loan, which is a great product. You want to?
No, you
Expand on that?
you can speak to it a little bit more.
Well, they're available under both FHA and conventional guidelines, and they can be very complicated. But in a market with as tight as ours is in terms of inventory, there's a definite use for that. There are different variations of it and different levels. There's a streamlined version and there's a full version. Streamline is basically, you get the cash and you can do simple repairs. But the beauty of these renovation loans is that they're good for everything except structural, basically. So you could you could literally scrape a house down to the foundation and rebuild it under a renovation loan. They require upfront inspections. There's so much work involved. You've got to have an inspector. You've got to have an appraisal done up front. You've got to have licensed contractors. It's almost like building a home, but there is some value in it when it's all said and done.
And I think to, expand on that too, when you talk about the type of employment that somebody has, it doesn't necessarily dictate what loan option they can do, right? Well, some investors will have different restrictions, but for the most part, what we're really looking at is how to best financially structure that, right? So whether it's a 3% down program or a 5%, or if they could save a lot on their mortgage insurance by doing 10%, or if they can talk about a gift of funds, or, the 80-10-10 loan that we have, just different ways and different tools that we have to be able to structure the loan, a renovation loan, whether that's through FHA or a conventional, right? So I think the important thing to know is that with GRA, again, it's a pretty specific GRA thing that we have so many different products and programs available that the best thing for you guys to know is, hey, you've got a question about something with that financing, go talk to Bob or Sarah. They have a wide variety of options available for you and can really talk you through what might be the best fit for what you're trying to accomplish.
Exactly.
Absolutely.
So I have a question for you guys. So let's say, we're curious here because we've got home loan options. We've got everything available. So I have two big questions. Jumbo loans,
Mhm.
what does it mean? And condo. The reason I ask about condos is because not all banks like giving loans for condos and they will charge you for it. So I want to talk about what your condo department looks like and what's really the benefit of you guys having a dedicated condo department.
Well, the thing about having a dedicated condo apartment is that oftentimes with new construction, they're not yet, they haven't yet been approved. And so there's a process involving getting the project approved. And it's a great service to have because once the project's approved, then it opens up a lot of different types of financing, primarily FHA. Spot approvals can be done, but it's more time consuming to do it on a spot approval basis as opposed to getting the whole project approved right up front.
Yeah, exactly.
Yeah, because for the approval process, they have to gather a lot of documentation, right? We need to make sure their insurances are in place and in line, that they're not under any litigation, that, how complete is the project? So having a department that just focuses on that for us is fantastic.
Yeah.
Because it's almost like a whole different world of approval that they have to make sure that all those boxes are checked.
Exactly.
And with jumbo loans, there's a limit set by Fannie Mae and Freddie Mac, an FHA of the standard loan limit. And then each county has its own limit as well. So it's really important, if you do think you're getting into the jumbo loan territory, to make sure they talk to us about if it's going to be a jumbo loan or a standard conforming loan, because there are different underwriting guidelines. There are different down payment guidelines. All of those things vary. And again, it can vary by county. So.
Yeah, and you guys are really up to date on this.
Well, yeah, and to Sarah's point, it's really important for those in this office to be able to know, based on where you're selling, that there are different loan limits for Weld County versus Boulder County. The national conforming loan limit is $548,250, but in Boulder County, it's like $654,000.
Yeah.
So Weld County is at the lower end of that, which is the national limit of 548, but it's over $100,000 higher in Boulder County. And a lot of you are selling in both counties.
Yeah. So these are really beneficial things for you to know. And for those of you who are like, oh, wow, this is way over my head. Guess what? You can call them. You can call and ask all the questions, right? And really start understanding what's important and being able to confront your buyer and present them with presentable options, and then also with people who really know what they're talking about.
Right.
Okay, this is really important for you guys to know. So That's enough about the products. We've really talked about a lot of stuff that you may or may not need to know, but the purpose of this is for you to understand that GRA knows what they're doing, okay? And it's not only that they know what they're doing, they're here for you guys, and they're really dedicated to trying to build that relationship. And give them a shot, see what happens. And I think it's really important for you to be able to talk with them in person or be able to talk with them over the phone and learn more. So that way you can offer more to your buyers. Now, the next thing that I do want to talk about with you guys is what does this process look like as far as what would you prefer to see? Let's say, you've talked with one of the realtors in the office and they're telling, oh, well, I've got, somebody that I'm about to, get into the process. What is something that you would love to see them bring to you? What would be an ideal situation? Not from like the employment thing, but we're talking about when should they start that process with you?
Immediately, because you don't want to waste your time with anybody who hasn't been pre-qualified at the very least.
Yeah, I would say, sorry, my phone keeps.
No, it's fine.
I would say that, or what I always tell people is that it's never too early, right? It's never too early. Even if I've had people come to me like, hey, I just graduated college. I'm thinking about buying a house in the next 2 years or maybe even 5. I don't know. I have no idea. Totally fine. We will talk to anybody at any stage, right? Because it's really about the education of the process, what they need to prepare, what it's like. So it's never too early, honestly. That's what I would say.
Yeah.
I mean, the sooner the better, right? The more prepared. We still get the calls at like, 8 o'clock on a Sunday. That's like, okay, I just found the house of my dreams and I need to get pre-qualified like tonight. And you're like, okay, take a step, but which we can still handle, but not ideal.
Yeah, exactly. So really being prepared on the forefront and making sure that your buyers understand, hey, this is really the first step, not going to show houses and take a look at the houses because it's really going to waste your time.
If there's hesitancy on your prospective buyer's behalf to get pre-qualified, then to me, that's a red flag, and if they don't want to do it, then maybe they're not really a candidate to be purchasing a home at this point in time, and
Exactly.
probably a good time to cut bait and move on to the next one.
Yeah, and then also the other cool thing too is, let's say they're not a great candidate for it at this time. Make sure that you follow up with them and present them with reasonable options. Having the conversation anyway without getting pre-approved is really good because they can now figure out, oh, these are the steps that I really should be paying attention to, and they get motivated to meet those goals because if they want that house so they can start building equity so they can start changing their life, they've already had the conversation. And then when they're ready, now they know who to go talk to, not just you, but also a great loan, right? A great loan officer. So this is really beneficial for both sides. GRA, you, everybody wins. It's fantastic. So highly recommend. Now, what are the great ways to contact you guys? Let's throw those numbers out. Let's throw those emails out.
Yep. Everything,
Yeah.
as Sarah's already mentioned, getting phone calls at 8 in the morning on a Sunday, but it's the nature of our business, just like yours, where we make ourselves available to you and to your clients. So for me, you can call me anytime at 303-378-2778. Call, text. I work evenings, weekends, make myself available to you and your clients whenever they need to become engaged.
Yeah, I would say the same thing. I mean, nature of the business for all of us that we're available all the time, no matter when you need us, and we're used to it. People will be like, oh, I feel bad calling you at, 8 o'clock on a Sunday. And you're like, well, it's the nature of, and especially in this industry, right? That's a huge thing with having a good loan officer that's responsive as well, right? You need a letter like by that offer deadline, right? So knowing that you have somebody that will return your phone call, that will get you that information when you need it is really valuable too.
Good.
But yeah, call, text, email. My cell phone number is 303-990-4794.
Good. Let's say that one more time. So we got Bob. What's your phone number?
303-378-2778.
Sarah?
And I'm 303-990-4794.
And the best part about this being recorded and being on YouTube is you can just kind of rewind a little bit
Right.
if you wanted to write that down
That's
right.
again. Okay, so thank you guys for coming.
thank
I
you very
really
much.
appreciate it. You know, this is a great, talk for you guys to understand. Please take notes. And if you want to ask any questions, feel free to shoot me an email, shoot Bob or Sarah an email, or give them a phone call. We're here for you. And I can attest to the fact that they are very good at communication, because Bob calls me at 7 o'clock at night. Yeah, and he's like, "Hey, you want to have a beer?" No, I'm just kidding. He's not. But he does call
Well, the
me.
masks have come
Yeah.
off, so that day is right around the corner.
Yeah, right? Yeah.
Or Cuba Libre or whatever.
Exactly. Well, thank you, everybody. We really appreciate you taking the time to sit down and watch our little presentation. We're going to be doing a lot more in the future, as far as doing some deep dives and being able to provide you with the most value possible. So that way you can present your buyers and your sellers with options that are applicable and things that are going to change their life and really make it easier for them to do real estate transactions with you. So please follow up for the next videos, and have a great day.